Introduction: the real battle is in your mind. Welcome to the psychology of following your plan in Forex trading. Before we dive into strategies, charts, or indicators, it's essential to understand one simple truth. The biggest battle you will ever face is not in the market, it is inside your own mind. Most traders believe that Forex success comes from technical skills or luck. But even with the best strategy, if your mind cannot follow rules, losses will accumulate. Your mind is the battlefield. Master it, and you master the market. Meet Daniel, a trader who spent months studying technical analysis. He memorized dozens of indicators and strategies. Yet after 3 months, he lost 40% of his account. Why? Every time he got a losing trade, panic forced him to break his own rules. He entered impulsive trades, chased markets, and ignored risk limits. This book is about preventing this story from happening to you. You will learn why following your plan consistently matters more than the strategy itself, how emotions like fear, greed, and FOMO sabotage traders, techniques to strengthen discipline, patience, and confidence, exercises to train your mind like a professional trader. Trading is a probability game, but the only edge you can guarantee is controlling your mind. Why following your plan matters more than anything else. Many traders are obsessed with finding the perfect strategy. They believe that if they just discover the holy grail of trading, profits will flow automatically. This is a trap. The power of consistency. Trader A has a perfect strategy but breaks rules constantly. Trader B has a simple strategy but follows it consistently. Over a year, Trader B will almost always outperform Trader A. This happens because consistency compounds profits, while inconsistency compounds losses. Key principles. Your plan is your blueprint for success. Every time you ignore your plan, you are gambling. Your goal is long-term consistency, not short-term perfection. Practical example. Imagine you have a rule. Only trade euro to US dollar when the RSI is below 30 and the trend is bullish. One day, the RSI hits 32, but you feel you might catch it anyway. Breaking the rule once can set off a chain reaction of emotional trading and losses. Exercise. Write down your trading rules. Before every trade, ask, does this fit my plan? Only trade if the answer is yes. Understanding the two selves of a trader. Every trader has two selves. The rational self and the emotional self. The rational self plans trades carefully, follows risk management, sticks to the strategy. The emotional self panics on losses, chases trades impulsively, makes decisions based on fear or greed. Real-life example. Sarah planned to short pound sterling to US dollar at 1,3000 with a stop loss at 1,3020. The price moved slightly above 1,3005. Her emotional self screamed, maybe I should exit. It's moving against me. Rational self stop loss is in place. Stick to the plan. She followed her plan. 2 hours later, the price dropped to her take profit. She learned that following the rational self beats short-term panic. Practical exercise. Visualize your emotional self before each trade. Rehearse mentally how your rational self will lead. Every day, repeat this mental exercise. It strengthens discipline. The psychology of fear and FOMO. Fear and FOMO are the two biggest enemies of disciplined trading. Fear of losing makes traders exit trades too early. Avoid good trades. Micromanage positions. FOMO. FOMO, fear of missing out, makes traders enter trades impulsively. Chase after missed opportunities. Overtrade in frustration. Story example. Michael saw US dollar to Japanese yen rally 100 pips and thought, I must enter now. He ignored his plan and risked 5% of his account. A sudden reversal wiped out most of his profit. How to overcome. Accept that you cannot catch every move. Stick to your plan. It is designed for quality over quantity. Keep a journal to track emotional decisions and patterns. Guided exercise. Close your eyes before trading. Visualize the market moving without you. Repeat, I only trade when my plan says yes. Building mental discipline. Discipline is like a muscle. The more you train, the stronger it becomes. Steps to build discipline. Predefine trades. Entry, stop loss, take profit. Use a checklist. Only trade if all conditions match. Set limits. Restrict trades per day. Review performance. Learn from mistakes. Story example. A professional trader never enters a trade unless. Trend confirmed. Risk reward at least 1:2. News events checked. Setup matches strategy. Emotional state calm. Following this checklist protects their capital even in volatile markets. Exercise. Make a personal 5 to 10 step checklist. Before each trade, read it aloud. Handling losses without emotional damage. Losses are inevitable. The challenge is how you respond. Common emotional reactions. Revenge trading. Overtrading to make back losses. Ignoring risk management. How to respond. Accept losses, they are part of the game. Focus on risk reward, not winning every trade. Treat losses as valuable feedback. Real life story. Emma lost $200 in a trade, but had a 1:2 risk reward setup. Instead of panicking, she followed her plan and her next trade recovered the loss and made profit. Exercise. After every loss, right? Reason for loss, emotional state, lesson learned. The role of patience in following your plan. Patience is the bridge between plan and profit. Without patience, enter trades too early late. Second-guess setups. Trade impulsively. How to train patience. Set alerts. Let trades develop naturally. Focus on quality setups. Remember, missing a trade is better than losing my account. Story example. Liam waited 2 weeks for euro to US dollar to hit his setup. Others panicked and entered early, losing money. His patience paid off. Exercise. Use a demo account to practice waiting for perfect setups. Record emotional reactions. The power of journaling and reflection. A trading journal is a mirror for your mind. Record every trade. Entry, exit, rationale, emotion. Review weekly to spot patterns. Transform mistakes into lessons. Story example. Jake noticed he exited trades early when market spiked. Journaling helped him realize fear, not strategy, caused the behavior. Adjusting his mindset improved results. Exercise. Start a journal today. Date, pair, entry, exit, emotions, lesson learned. Review weekly. Combining psychology with strategy. Even the best strategy fails without psychological control. Align strategy with your personality and risk tolerance. Avoid strategies that cause emotional stress. Focus on long-term consistency. Story example. A scalper strategy suits disciplined traders but destroys panicky ones. Swing trading suits patient traders. Knowing yourself is key. Strategy plus discipline plus emotional control equal consistent profit. Guided mental training exercises. Daily mental drill. Visualize upcoming trades. Imagine emotional self trying to override plan. Repeat. I trade only according to my plan. Weekly reflection. Review journal entries. Note where you broke the plan. Plan improvements. Meditation exercise. 5 to 10 minute daily. Focus on breathing. Visualize trades calmly. Reinforces patience and control. Real-life trader stories for inspiration. Daniel lost 40% before mastering plan adherence. Sarah learned to control emotional self, gained consistent profits. Michael overcame FOMO, built patient approach. Emma turned losses into lessons, strengthened discipline. These stories illustrate that psychology, not strategy, separates winners from losers. Conclusion. Master your mind. Master the market. Success in Forex is not about luck or intelligence. It's about mental mastery. Accept emotions. Let rational self lead. Build patience, discipline, confidence. Reflect on progress. Your trading plan is a promise to yourself. Honor it, and profits will follow. Bonus. Exercises for audio listening. Pause after each chapter for reflection. Read trading checklist aloud each morning. Visualize trades before the day starts. Review journal weekly. Thank you for visit our YouTube channel's huge library audiobooks. We have more book about financial, motivation, investing, learn more Forex, trading psychology mindset. See you next books. Don't forget to subscribe if you want helps us. Please click on that black button you see down there.